CJ Muse, Cantor Fitzgerald analyst, joins us now. You do have a buy rating on that stock, $200 price target. Welcome. Let me just quickly get your reaction to the news related to Qualcomm since you cover it and you only have a hold rating on it. How meaningful is this?
Well, I would say that, obviously ARM is trying to juice up the royalty stream. And, I think that on the other hand, Qualcomm, has been very successful in court over the last 4 or 5 rulings, whether Apple or everyone else. So I think, it substantiates Nvidia, it substantiates their track record on the legal front. But, at the same time, it doesn't change, the challenge for them, which is that they're most heavily levered to smartphones and that the diversification strategy is going to take some time. But clearly, on the margin, a positive for them.
Is this still, now as we take it towards NVIDIA, I mean, is it just still NVIDIA's world and everybody else is just living in it? And is that the way it's going to be for the foreseeable future?
I think that, when Broadcom reported in Hawk 10, outlined the vision for custom silicon, that was a change statement in the market, appreciating how the world is led by and dominated by NVIDIA, but that there's also a rising tide here for custom silicon that will help the likes of Broadcom and Marvell as they support, in Broadcom's case, Google, Meta, TikTok, and in Marvell's case, Amazon and Microsoft. So, there's definitely different spots for the different kind of areas of silicon. But, at a very high level, as you think about NVIDIA going into their best product cycle in the history of the company with Blackwell, it's hard to not, think of them as the top outperformer for all of semis in 2025.
NVIDIA's stock has been cooling off recently, falling more than 8% over the last month, while the S&P 500 increased by only 0.5%. Bank of America analyst Vivek Arya views this decline as temporary and a typical aspect of the company's introspection, based on both internal and external events. Speaking on a broadcast, Arya attributed NVIDIA's transition to their new Blackwell AI technology to the execution issues. When it was first released in March 2024, Blackwell was praised for its uniqueness, but its inability to draw clients has had an impact on quarterly results. According to Arya, the past 2 quarters have not been smooth because they are going through growth pains as they switch from one product generation to the next. Concerns regarding NVIDIA's exposure to China under potential tariff threats, a new U.S. government, and broader market dynamics impacting large-cap tech stocks were also mentioned by Arya. Despite short-term difficulties, he is hopeful about NVIDIA's long-term prospects, highlighting the company's dominant position in the semiconductor industry and the rising need for artificial intelligence, AI. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
So let's get right to it. Let's talk about NVIDIA. The numbers for NVIDIA for the year, last 12 months, up 178%. The last 6 months, up 7.7%. Here's the one that's interesting. The last month, down 4.1% in the last month. So if you remember, on November 21st, it hit a high of $152.89. You can see it there at the peak. And then it hit the lows on the 17th of December at about $126.86. So it's had a good $25, $26 correction here in NVIDIA. And it does that over its life. You can see over the last years, it rallies up strong on good news and then consolidates and sells off. It's not a straight line up or down, frankly, for NVIDIA. So how do we look at a name like NVIDIA? Well, over the holidays, I looked at NVIDIA like something more passive to trade, right? We're not sure where it's going to go, so you want to use things like theta to help you. be patient and wait. So the paper money practice trade that I did here in Tesla or in Nvidia was I went out to the January 17th expiration. So I gave myself duration, 25 days till expiration. I bought the 140 call. Then I went out to not this week, but next week, December 27th. Actually, it is this week. I apologize. It is this week, December 27th, and I sold the 140 call. That is a traditional call calendar, looking for, as you can see, the peak there, right around the 140 strike. So I put that in about $4.40 is the debit. It's trading about $4.25 right now. Now, here's the thing. $4.25 seems a bit pricey for a 140 call calendar. It is, except that because you've given yourself time, remember, you can extend duration on this trade and chip away at that net debit. When you do, you also chip away at the break even on this trade. So obviously, you're looking for a move towards the 140 strike, which, if you look on the chart, Tesla spent, or Nvidia, again, I've got Tesla on the brain. Nvidia has spent a lot of time at or near or breaking through or under or above the 140 strike. So this is a very popular level for Nvidia. So a call calendar focusing on the 140 strike, it gives you about 11 deltas, a little over 11 deltas long. It's collecting $6.50 a day in theoretical theta, and you're long a little vega on this trade too. Remember, like the call calendar, because you're buying something 25 days out. So this is a move. You know, the utility of the calendar spread is that you can pick whatever you want in terms of the target where that spread peaks out, and that is the short strike. The strikes you use determine where that peak is. Could be the 141, 142, 143 strike. Could be the 138 strike. It's whatever you choose to calendar spread, and then price it out and check out the risk. But this one is buying 25 days out, selling 4 days out with a chance to roll into the January 3rd, chance to roll in the January 10th. And then if you so desire, you could extend duration and make it a vertical spread into the January 17th. So at least 2 chances to roll and maybe even 3 chances to extend duration on this trade. Okay, so there's our call calendar in Nvidia. The second one.
Recently, Nvidia has made news for all the wrong reasons. They are encountering regulatory pressure in China, experiencing difficulties delivering Blackwell GPUs, and having to explain to the U.S. government how their chips got into the hands of Chinese people. Despite all of this, its stock has barely changed over the past 6 months, yet it has still increased by 174% this year. As everyone knows, Nvidia's stock rises more than any other. When will the next rally be held? Answering the question is difficult. Instead of attempting to forecast Nvidia's next bull run, we think it is far simpler to place a wager on the company's long-term potential. Recently, Nvidia has made news for all the wrong reasons. They are encountering regulatory pressure in China, experiencing difficulties delivering Blackwell GPUs, and having to explain to the U.S. government how their chips got into the hands of Chinese people. Despite all of this, its stock has barely changed over the past 6 months. Yet it has still increased by 174% this year. As everyone knows, Nvidia's stock rises more than any other. When will the next rally be held? Answering the question is difficult. Instead of attempting to forecast Nvidia's next bull run, we think it is far simpler to place a wager on the company's long-term potential. The next earnings report or the introduction of a technology related to artificial intelligence that needs even more NVIDIA GPUs to function could be the cause. Conversely, big tech can surprise us by cutting back on its expenditures. Others would argue that we don't need any more NVIDIA GPUs because there are already enough of them available. When the 2021 cryptocurrency boom hit, everyone wanted to own GPUs. Chip firms saw unprecedented profits as a result of the price spike caused by the soaring demand. However, as soon as the demand subsided, there were enough GPUs available, so buyers didn't need to upgrade. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
How long the cycle is and how many quarters we could see growth like this. How does it compare to other previous semiconductor cycles?
Well, this cycle is unlike any other. I think most investors look back to the advent of the internet and how long kind of the internet infrastructure investment cycle played out. But this one's very different, right? Where the companies that are making the investments, predominantly the hyperscalers, they're generating meaningful free cash flow despite, spending hundreds of billions of dollars building out AI. And let's be clear, this is existential for these companies as they all try to get to AGI. And so I think this is a multi-year investment cycle. And, just on Friday, OpenAI released O3. And this model is incredibly important in the sense of the improvements that they're making, the reasoning that they're using. So it's post-training reasoning, where the more compute you apply to the large language model, the better the outcome. And really the big takeaway is that it's driving even incrementally more compute requirements to get to AGI. So the short answer, I think investors are going to be surprised by the magnitude and duration of the investment in AI. And I absolutely believe that, if there is a pause for Nvidia, the first we would see it would be 2027. And if I'm right with that assumption, then there's clear line of sight for growth for the top AI accelerator companies. So Nvidia, Broadcom, Marvell, I would say the key arms dealers underneath that, whether it's TSMC or ARM or, semi-equipment players or test companies like Advantest and Teradyne. So I think this AI investment cycle really has legs.
With the GPUs now, we might experience a similar situation. The demand for AI may eventually decline, and the market may be sufficiently served by the hardware that is currently available. At that point, a 50% correction, such to the one that occurred in 2022, cannot be ruled out. What then is the long-term strategy here? This is our opinion. Numerous GPUs have already been sold by Nvidia. It will continue to sell more in the foreseeable future thanks to the Blackwell variant. Then what? We think it's comparable to Apple's transition away from the iPhone. iPhone sales were the driver of Apple's growth for a long time, just like GPU sales are now driving Nvidia's growth. After its ecosystem had enough devices, Apple shifted its focus to the services sector. Nvidia might take a similar approach to making money off of its current GPUs. The idea that Nvidia would eventually enter the cloud computing market is not out of the question. If Google and Amazon are able to produce their own chips instead of purchasing from Nvidia, Nvidia will be able to create its own cloud and stop depending on cloud service providers to earn money off of its GPUs. No evidence exists to imply that this may occur. However, investors will not be let down by Nvidia's management if they are long-term investors. There will be more innovation after Blackwell. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.